Welcome back to the Burrow. It's Lala Bunny, head trader at Bimbo Trading Academy. And today's topic is about utilizing screeners for swing trading. And specifically today, we're going to talk about the 24-hour market on Robinhood. So, if you are already on Robinhood and you want to start trying out the Lala Bunny method, which is buying $1 of every stock, a good place to start would be the 24-hour market. And the reason why I like trading these is because sometimes moves happen overnight. And even though I can only trade these during 9:30 to 4 because I have fractional shares, because I own fractional shares, I can't sell them pre-market and after hours. But there's a lot of activity that happens. So I like to be in these particular companies because they're major companies. So when you go to the 24-hour market on Robinhood, you can just type in 24 and it'll bring you to it's called a screener. Um, There are 907 items on this list currently. It fluctuates. And of these items, about half of them are ETFs, exchange traded funds, and I don't trade ETFs. So I only buy stocks. So depending on what you want to do, you might want to buy all 900 items on the list, or you might want to focus just on stocks or just on ETFs if that's your thing. So when I get to this screen, you can sort these 900 items by symbol, price, or percent change. So the symbol is the stock ticker, so it'll give you alphabetical order. That's not very helpful unless you're just looking for a specific company. Okay, the price, it will give you low to high, high to low. You can switch it up. Again, to me, that's not that helpful. The price doesn't matter because I own $1. I'm just buying $1 of everything. Now, percent change, that's where it gets interesting. So you can sort the list based on the percent change. So today is Wednesday, February 12th. So I'm going to actually read off real-time data from Wednesday, February 12th. It's like 6:15 a.m. right now before the market opens. So we've got Upstart, and that company is up 26%. So if you already owned Upstart, you're going to have a profit. So if you owned like $1 of it, depending on when you bought it, you might be up by about 20 cents, somewhere in that range. Now, KE Holdings is up 8%. DoorDash is up 6.57%. SMC, Super Micro Computer, is up 5%. Alibaba is up 4.86%. And there's more. So you can go down. So for me, anything above 5% is significant. If it's only up 1, 2, 3%, that's not a significant move. So I definitely want to pay attention to the movers, make sure if they are up that I own them. If for some reason I don't own them, I could either choose to buy it if I think it's going to continue moving up, or I can just wait till it drops and then buy it. Now, if we sort it the other direction, the percent change, this will give us the stocks that are down the lowest. So we have Lyft down 12%, Avis Budget Group, that's the rental car, down 10%. We have Zillow down 6%. MFA Financial down 4%, Penguin Solutions down 4%, Vertiv down 2.99%, Academy Sports and Outdoors down 3.52%. So those are just some stocks. Now, I can look at my stocks, see if I own them and see how far down I am. So for example, with Academy Sports, the ticker is, it's hard for me to read it because my phone screen is cracked. I think it's ASO. Okay. So with this stock, for example, the last time I purchased it was I can look at my whole history. So in May 30th of 2024, I bought $1 of it at 58 when the share price was at 58.15. And then I sold it on September 18th when the share price raised to 62.60. And I sold it for $1.08. So those are the kind of profits I'm working with here. I bought it for $1, I sold it for $1.08. I made 8 cents on that stock. Okay? And then I rebought it right away and on September 18th, and I've held it all the way till now. Now, this stock is down. So I look, my dollar that I put in is only worth 81 cents right now. So that's totally okay, and that's totally expected. The stock is down almost 20%. So that's it. I just leave it alone. I wait for it to pop back up. Sometimes if the stock is down, I'm going to try to see if I can find an example, but if it's down so low, like 70 or 60%, no, I'm sorry, 70 or 60 cents, which would reflect a drop of 30 to 40%, then I will add another dollar to my position, because if I leave it alone, it's very hard for it to come back up. There's something called averaging down. I believe in averaging down. I practice averaging down. It's very controversial in the stock community, but it has worked for me countless times. Okay, so let's see if we can get back to another one for an example. Okay, so something called Vertiv. It's currently trading at $119. Let's see what my dollar's worth. My dollar's worth $1.10 right now. So I'm up. So even though this stock is down, it's up from when I bought it. So I go back, look at my history, and let's see. Whoa, I bought and sold this stock many times. So I started buying it in May, $2 of it at 97, sold it at 99, sold it at 106, bought it back at 106, sold it at 112. I looks like I had a remainder 6 cents. I just sold it off at 114, bought it back, sold it at 124, bought it at 119, sold it at 151 for $1.26. So I made 26 cents in profit on that one, bought it back at 101. So I sold it at 151. It dropped down to 101. I bought it back. I bought the dollar back. And then I sold it at 119. And then I bought it at 105. And right now it's up to back to 119, and I have a 10-cent profit on this stock. Penguin Solutions I don't own. Now that means I probably recently sold it. So let's see. It's at $19. Let's see. And I sold it on February 10th at $21. So I made my profit because in the past I bought it at 29. Perfect example of averaging down when it works. I bought it at 29. The stock dropped to 16.45. I bought another dollar when it was at 16. Then when it went up to 21, I sold it. And then it went up to 21.22 and 21.21, and I sold it off. So that's just an example of when averaging down actually does work. Now, I don't own this. I told you I sold it off around 21. It's now down to 19. So should I buy it? Yeah, absolutely. So trade, buy, I would buy $1, but so because my phone's all cracked, I can't even type in $1. So I have to type in the fractional share. So let's see, 0.1. Let's see how much that will cost. This is how I basically 0.05. Let's see how much that would be. That's $1. Okay, so Q for later, because the market's not open right now for fractional shares. And I just submitted it. So as soon as the market opens at 9:30, I will repurchase $1 of Penguin, and I'll be back in PENG. So now, MFA Financial. Do I own it? Yes. It's trading at $10. Let's see what I bought it at. My stock is worth 85 cents at the moment. It's gone down about 15%, and I had bought it at let's see what I did in the past. I bought it in June at $10. I sold it at $11.50. Bought it back at 12, and now I'm holding it, and it is low right now. It's down to 10. So that's why I only own 0.85, 85 cents of this stock. Okay, next. Avis. Let's see, I own 80 cents worth of Avis. It's worth $80 right now, the share price. It's down 20% from when I purchased it. And I purchased it in July. And this is just one of those stocks I've never sold before. So I bought it in July. I've held it till now, and it's down 20%. That's okay. I'm just going to hold it till it popped up. No biggie. Lyft. Let's see what I did with Lyft. Lyft is trading at $12.66 right now. My stock is worth 97 cents. So I've only lost 3 cents. I'm only down 3 cents on Lyft. And let's just look at our history with Lyft. So it looks like I bought it in May 6th for $17. And then I bought a little bit more when it hit $13. So now it's at $12.66, close to 13. So that's it. Okay. All right. So basically what you can do with this is it will tell you what is up for the day, what is down for the day. And if you see that everything is within like a small range, like nothing's above 5% either way, like low or high, then the market, it's trading within a certain range, but then you might see outliers like 10% up or down, 20% up or down, anything more than like, if it's like 30, 40%, that's very dramatic. And you might want to get in on those plays. So if you're very strapped on time, like some days, the only thing I really have time to do is check the 24-hour market, because what it does, it allows me to see what a lot of the major companies on the stock market, what they're doing, and what's going on maybe in a certain sector, because sometimes you'll see that everything, like let's say it's healthcare companies, like they might be all the ones that are profitable at the moment, or they might be all the ones that are losing money at the moment. Construction companies, like I noticed that something called like baskets of stocks, groups of stocks, when some are down, there's something called like sympathy plays, where these stocks are sort of related to each other, and that will help you if you study that, the 24-hour market. If you study that screener, it'll help you figure out what's going on in the markets. So I hope that was helpful, so you understand more what actually is the bunny method, how I actually apply it, and knowing when to take profit and when to actually add to your positions. So again, if a stock goes up to like $1.20, I will sell it. I've had stocks go to $1.30, $1.40, even higher, $1.50, $1.60, which is like very good returns. And I've also had stocks drop down to being worth like 50 cents, where I put $1 in, they're only worth 50 cents. That's definitely where I add another dollar, because I know I'm buying it at a cost way lower than when I got in the first time. And that if it rebounds, even now, it doesn't have to rebound back to my original price where I bought it at. If it rebounds even part way, I can get out with a profit. And then I can take, let's say I put $2 in, I could take my profit out and put $1 back in. So what I've done with that is I've reduced my exposure on that stock. So that's the bunny method. I would love to hear any critiques of this, because people think that if you average down that you're eventually going to get caught up and you're going to get caught in one stock really, really bad. And that can happen if it's an expensive stock. But if you're only putting $1 in it, the most you could lose is $1. So the downside is not so bad. I do want to hear from the trading community, because I developed this method. I think it's working. Like, I'm profitable, so it's working. So that's enough evidence to show that it is working. Now, will it work in every single market condition? Remains to be seen. And yeah, I'm going to keep doing it and keep showing you my results. And it's like, this channel is all about transparency. So I really hope this helps someone who just, the idea is just to give you the confidence that you can start with $1. And then you have to use your own judgment, based on when to buy, when to sell, when to get out of a position. You'll develop that over time. So this has been another session with Lala Bunny, and I'm just so happy to be here. And stocks, it's just been a great outlet for me to use my analytical mind. And I feel that it's something I can really put myself into and get great results. And I know it's going to change my life. So here we are. And if you want to like, subscribe, buy merch, I usually include like the link. You can definitely find the link to my merch page. And we have everything on there. We've got shirts, sweatpants, journals, mugs, t-shirts. I said that. Sweatshirts, hoodies. Um, there's a duffel bag, there's a jacket, there's a bunch of stuff on there. Please do check it out. And if you want any coaching, I put up some videos about coaching. And that's all for now. So Lala Bunny signing off. Happy trading.